What up, all you traders and investors? Thanks for joining me. This is Trade Doc with Beast Mode Trading Club. Make sure you check it out. There's a QR over here that you can scan. Get on the website, see our products. You need help trading, you need to start getting into trading. You want to trade stocks, cryptos, options. We got your back. Even if you want to just get some info on how to get started, what brokerages to use, and stuff like that, we can make that happen as well. Also, some of you know, but maybe you don't, that I've been doing a podcast for the last couple years. Thoughts on Trading with Trade Doc. Look that up. The podcast would be an APA podcast. They're found all over the place, so you just kind of Google it and you find it. Those who get it, got it. Those who don't, wish they did. So I was asked to do an analysis on Mara. It's one of my favorite stocks, and not because I have a love for them, it's because I've sucked so much cash out of it, so you can't blame me for that. So we're going to take a look at that right now. I'm short puts on it, up, up, and up. As long as the account keeps going up, that's what matters. So here we're looking at about the 2-hour chart. This is just kind of like the way I like to look at it. You can see that on the last earnings, they did well on the last earnings. The next earnings is going to be in August. On the earnings that just passed, there was the vol crush that we all like to see. And not only a vol crush, but the price got suppressed too. It all happened all at once. But if you have Mara as I do, and you have short calls against your position as protection, you all know that covered call just bought you a short put to bounce up the long side. So that's the way I'm playing it. I'm long. I'm gonna stay long Mara for a long time. I'll sell options against it. Depending what it wants to do, I'll be following it. So now we're just gonna look at the action. This is like mostly like the 2-hour. So this is like the last time that I marked it on this chart, but just buying the butterfly down here in the 22s. But we're gonna look, and Mara just had a pop on Wednesday. Thursday kind of broke out of the range on Wednesday. Thursday and Friday started trickling down. So will it keep on moving? Kind of give you one of these. I don't know. That's what we'd want to see. Maybe like maybe if it could test this range here. If it kind of test off this and move up, we'll see. But cryptos right now are kind of like rolling up to the upside, so that's why I'm more bullish Mara now than I was a couple weeks ago. So in this long term, I kind of like to target like the 28s and the 30s for being bullish. Say between 28, I'm say call it 33. So up in this area, it's kind of like where my targets would be. But I wouldn't. I'd put this on maybe 45 days out, just to give me enough time to make sure it could reach up there. But then again, it could do it in a week, and I'll just take the profits that I'm given. So let's see on a shorter time frame. This is the chart I use for volume and volatility. So you're looking at Wednesday, Thursday, and Friday. So this was last Friday. It was just a slippery slope down. Monday opened up big volume. Opened up with big volume. Kind of faded all that. And then towards the end of the day, we had some more volume pushing the price up and stabilizing. Tuesday, traded sideways all day. Had a mix of big volume on a sell on the open. And then Tuesday night, the aftermarket bought it up. So that's when Bitcoin started rising. Wednesday, a big buy volume in the morning. You see these big buy orders push the price up from 23 to 25, and it's hung up in there. At the close of Wednesday, the aftermarket brought it up to open at 26 on Thursday. So 26, you can kind of see like in the mornings, Wednesday morning, from the open till about 10:30, all the traders were just buying it. Wednesday, from the open till 10 o'clock, all the traders were kind of selling it, readjusting, which the rest of the retail let the price slide down. Big sell order at the end of the day and the after hours. And then Friday was just like a continuation. So it's trying to retest the lows. At the end of Friday, there was a sell-offs, but just small volume. So it's just probably like the laggers that still had positions. They wanted to get out of it. They just sold off. So now the price is sitting at 24. Well, 23.90, 23.98 according to the chart. Market's not opened, but we'll see how it goes. So how we gonna approach this? This is a 9-minute, and I'm using on the 9-minute. This is kind of like where I put my triggers on. Right now, it's still signaling bearish, so I'd like to see another some sort of like bullish reversal happen before I'd go long. But definitely would go long Mara versus short, especially being at $24. Here's the 15-minute chart where it's just following more volume, kind of showing where the action is on Friday. Friday there was nice volatility. Could have sold the open at 25 and then bought it back at the 24.50s. And I know like with stocks that's hard to do, but when you're doing the options, this like a move of just a few percent moves the options a lot more. So that's a 5% move, which in the options probably would have been 20%, which is still low for options, because options you look for bigger return on capital. So I don't know. So nothing we can look at is to see what type of positioning we'd want to do. So let's say that we do want to take this trade, and at the same time we want to make sure that we have protection in case the price stays neutral or even comes down a little bit more here. So we can take a look at the options to see how those are working. And I do have on, it kind of looks like good calendar setups. Now the volatility is down, is low compared to historical. So looking to be option buyers at this point. And just because the way this is, the front months implied volatility is higher than the back months. That means it's good to sell calendars, selling the June 18th and buying the 16th of July. I'm gonna actually have some positions down here. Yep, so this is the calendars, and I have them at 25. So let's see what this position looks like. Go to the chart. We want to get this one going, so let's get the calendar at 31. But since it is pretty much, we're going for short term, we're going to cover a lot of area just in case something happens. So we want to cover something like this. Okay, I want to be covered between 35 and 1850s, which is pretty wide. So 35 to 1850s. I don't think a calendar is going to do it. We want to be covered at 35. So this one doesn't have to move up that much. So we're going to try like the double calendar. I have the calls. I'm going to move this up to 27. And then just put, I'm going to move down to like 23. Let's move it down to 21. That brings me down to 8. Let's go down to 20. So that covers me to around 1860. That's a double calendar position. And let's just do it with straight up. If we do it with straight up calls, we'll be paying $267 for this. If we do it with the puts, we'd be paying $262. The deltas are almost at 6. Let's try it again at the calls. The deltas are 6 point. So you get a little bit more juice using calls. It's just a little bit more. So optimal, let's try to get optimal here. I'd probably be short the high one. I mean, use calls for the high one. That way those can expire. And then use puts for the low ones. So use calls for the 27 calendar and using puts for the 20 calendar, 20 put calendar. Now the 20 put calendar is actually there only for protection. You can see like the 22 calendar by itself, it's going to cost $114. And if the price stays here and moves down a little bit, you're going to make 50% on it, roughly about 50% on it. It's the one that, you know, this is just insurance for protection. The one that we really want to beef up, and you can probably add 2 of them, would be this, the 27 call calendar, which would cost $157, but you can easily make a little over 50% on it, about $75, but about 50% on it per. So by having them together, we call this the double calendar, which has me covered from 32 to 1880. And I wanted to be covered until 34. So if I move this calendar up another strike, almost at 34, 39. Okay, so here we're covered up to 34.50, and it can go as low as 19. It costs $260 to get this done. This is kind of like safety because what it is, since my short calls would be at the 29 and the short puts would be at the 20s, I could turn this into an iron condor if the price stays in the middle. That means like the front month is going to start losing theta, and if it really doesn't move, which it is going to move, but say you just stagnant for a while, I can turn this into an iron condor and just let the position expire worthless, since I'm already kind of set up for that. This is one way to trade it. that I would trade it, where I'm a little bit more bullish, and then this side would be just protection. So it had me covered in this range here, where my return on investment would be around 60 on 260. So that's a little, let's see, that's a little over a 20% return, which is not bad for 2 weeks. 20% return in 2 weeks, that's respectable. Another thing you could do is, like, say you are a little bit bearish, is just put 2 of these on. See how it kind of evens it out. It would cost you now 373, but if you're concerned about the downside, that's one way they can do to hedge that risk. You know, you do it by themselves. Having 2 of them would cost you 228. And your max return will be 100. That's close to a 50% return. But then again, the price does have to come back. Does have to come down to the 5150s. So those are trades to be made, you know, for the next couple of weeks that I would do. This is not a financial advisor, and you know the whole spiel. You push the button on your own. Nobody's telling you to push the button. You're responsible for your own stuff, and that's the way life is. But another way to trade it, it would be like a butterfly. It's just gonna be hard. I don't know. It would be hard to get it wide. Let's see if I want to cover myself from 24s. I mean up to 34 and 18s. I have to buy out like the 29s, maybe the 39s. Let's try that, the 39s, and buy the 15s. It's kind of uneven. Buy the 14s. It costs a little bit, but protection costs money. So here is a little bit even. Now I have a put calendar selling, and this is on June 18th, selling 226 puts, buying a 39 put, and buying a 13 put. Pretty wide, cost about 745. Your max return would be about 650, not a lot, but at least you're covered between the 3150 and the 2050. Now if I did with calls, it doesn't really change the coverage, it just changed the thetas, I think. Let me see. Yeah, so it would change the thetas. You can kind of see, using the put butterfly, I'll be making $11.30 per day, and the deltas are positive 12, meaning that if Mara goes up $1, I'll make 12.80. If it goes down $1, I'll lose 12.80. Now if I go with a put and kind of see the theta, it's like a little bit more protective. The theta is a little bit less, meaning you're making $7 a day, but it changes. If Mara goes up $1, I'll make $6. If it goes down $1, I'll lose $6. So it all depends on how conservative you are. If you were to take a position like this, how conservative you are as far as, or how bullish you are. Me, I'm bullish. I'm not 100% bullish, meaning I'm going to buy naked calls. I never do that. But I am bullish on Mara, especially for the next few months. But these, right now, I'm showing you trades you can make in the next couple of weeks. Aside from that would be like selling naked puts, or if you already have Mara, selling a protective call against it. Those are 2 other options that could be made. But as far as like right now, this moment, probably my favorite trade would just be this one. Just doing double calendars. I mean, it's an easy 20% in a couple weeks. We don't hit home runs in here. We steady stack. That's it. And here the trades say if you had like 100 Mara shares, I'd be selling like the 33 puts. So as you had 100 Mara shares, selling the 33 puts. Say you're not into Mara and you just want to buy it. I mean, 24 bucks is pretty cheap. But this is what your position would look like. So you bought Mara at 24 even. This is what it looked like. 100 shares. You know, for every dollar it goes up, you make 100 bucks, obviously. So you have 100 shares of Mara at 24, go up 100 bucks. So it can go up. This is pretty much the range. This is like the market maker moves. The probability range is between here. Now, say you bought it and you sold the call. So the $33 calls are going for 73 cents. So I mean, it doesn't make that much of a difference. So if you cap it, so what it does is just helps you, like Mara can come down to 23.30, and you don't lose money until it goes below 33.30, where you keep the $73 that you just sold the put for. But say you just want to do like a swing trade, like you don't think Mara is going to go up above 25, so sell the 25 put. I mean, it's 25. You buy 100 shares of Mara at 24, sell the 25 call. Now this is kind of like the position. See, so here you're capping off your upside. So once Mara hits 25 and you just let it go, you pretty much can't make any more because your call is going to have to sell those 100 shares at 25, which is not bad. There's $100. You know you're locked in. But if it goes down, you can kind of see it can go down to 21.30 before you lose anything. So it can go down to 21.30. It expires. You keep the credit that you sold this for $227, and you just move on to the next trade. So there's a few options depending if you're in it, if you're out of it, if you're completely out of it, looking to get active. If you've never done a calendar before, don't do it. But these are just advanced things that I do, that we do here to keep on stacking. We don't buy naked calls. So here's your naked call in Mara. It'll cost you $227. I mean $292, and the price needs to go up above 28. Your theta, you're going to be losing $9 a day, and your deltas are 50 bucks. Granted, if Mara goes up $1, you're making $51. So my strategies are pretty conservative. They are more of a they're more in the 80 to 70% probabilities of profit versus something like this, buying naked calls, where you're just hoping that, what if Mara just goes up to like 25, if it moves up $1, you can still lose everything by expiration in the next 2 weeks. So I think another trade, if you're not in it, you just want to scalp it or something, it would be this one, where you'd own 100 shares of Mara, keep the $278, and if it goes up above 25, then you're selling out, and you just made 100 plus 278. That means you'll be up $378, which is well over 10% of position. And if you can make 10% a week, then you just keep doing that. Anyways, that's about it. There's not much to say. Make sure you check out the website. Brand new. Prices are we just starting it off. Prices are cheap. Get up in it before they go up and we get too busy. But right now we can help upcoming traders. We can help traders that need to find their edge. It can help traders that just trying to find a strategy. Um, and we can help people start getting into trading. But if you're going to start into trading, believe me, we're not going to allow you to lose many money. You're going to want to buy this and want to buy that, buy this, but no. You're going to do this and you're going to do this and you're going to make money and then you're going to be happy and then you're going to make money on your own because we're just going to give you the tools, information you need. And anytime you need a hand or any help, come back, hit us up. We're human. We're here to help. Anyways, till next time, remember, check out the Thoughts on Trading with Trade Doc podcast at the same time. Peace.